Now dollar index, top to bottom 50% retracement and 61. In this resistance zone, price showing rejection. So dollar and US 10-year bond yield both are linked, and I think 10-year bond yield are crossing limit. So more yield go up from here. That means more than current Fed interest rate 450. That will be highly overbought for dollar index. That means this entire area 106 to 108 is your resistance zone. And once correction starts, let's see how low it goes. And you have seen trend line, breakout, retest, new intraday high. It goes down again, then again you can expect retest of trend line. Not static but dynamic support level. And this is holiday week, we all know. Let's see what market do. But immediately when January start, New Year 2025 start, when Fed seeing inflation rising and less rate cut, market do not need to do tightening for Fed. Now Fed will do market tightening. Now weekly time frame of Euro USD, you can see top to bottom 50% retracement, again rejection by weekly candle. If you see tail and closing opening price of candle, then this is the difference between line chart and candlestick chart. So line chart is showing rejection on 50% retracement level. This is second time, and dollar highly overbought and yield already extended, crossing the limit. So below 50% level, this is a buying opportunity, trade with bullish bias for scalper. You can see that was horizontal support level, breakout, retest, trying to make new lower low, but market is failing. So watch carefully. You have fib retracement, you have static horizontal support level and oversold market on weekly chart. But you will trade carefully on H4 for bullish setup. So if you see daily chart of Euro USD, for clarity, that was support level, breakout, retest, trying to make new lower low, but market failed on Friday last week. So for scalper, 3488 is your static support level. Buy and trade based on this level. And first target will be neckline near 06, 011, double bottom, then retest of neckline and new higher high. Double bottom technical setup. So you have a chart pattern, you have static support level, and you have weekly time frame fib level or oversold level. So on intraday compared to weekly, you can trade with bullish bias on H4 and lower time frame. Same with GBPUSD H4 time frame. That was your static horizontal support level 126. Price second time goes below this level but fail to make new lower low near 125 level. So same like Euro USD, possible double bottom setup. Price goes up to 128, then neckline retest and new intraday high. And if you see USDCAD weekly time frame, static horizontal resistance level, this range 2-year-old sideways range breakout, and this will be big static resistance level. If this level retest, then because of highly overbought dollar index, you can sell near that area. That means retest of this range after breakout. Now USDCHF, you have weekly time frame and this trend line, third retest and weak failure last week. So on trend line retest, if retest happen once again this week, then you can sell. And since there is no support before 0.84, so using 50 retracement top to bottom, that is only option. So Bitcoin monthly time frame, that was long sideways range and breakout in big monthly candlestick, but after that sideways, and you have seen multiple rejection near 100k. Because based on current market condition, best thing Fed can do is stop rate cut immediately and trigger long rate pause, higher for longer. Because if they do not stop, which they did entire year from March until September 2024, then Bitcoin will fly more, but end game is start rate hike once again. But that totally depend on Trump politics when he returned into White House. And if we see weekly time frame for more technical clarity, flag pattern, pole 1, flag pattern, breakout, then length, both sides almost similar. So number again come near 100k. So 100k can be possible resistance and 70k can be possible support level. But still for day trader and position trader, because Bitcoin is not ready for scalping, this level is static horizontal support 92,092. This is a big static horizontal support level. As long as price trading out this area, you are safe. Once this level break out, retest, new lower low, retest and new lower low. And silver, clear trend line, breakout last week, price did same as expected, $32 retest, breakout of trend line. Now next level is $30, wait for retest and expect new lower low. So final step in trend line, retest after breakout and new lower low. That's when wait for upside correction. So clear trend line, clear static resistance level $30, but still varies on silver. And if you see, there was head and shoulder chart pattern, breakout, next step neckline retest, one more head and shoulder chart pattern, breakout, one more step and neckline retest. So wait for correction, you can sell, and we have to see next lower low, how low it goes, but maximum you can expect 26. SP 500 monthly chart, you can say 1 or wave A, 2 or corrective wave B, wave 3 or impulsive wave C. Big cracks on FOMC decision, exactly 100% projection 6108. So somehow magically technical, which we say Elliott wave, and macroeconomics both are working at the same time like magic. This was the biggest crash based on history. Last time this happened 2013 when they first time did QT policy. And this is last week for Santa Claus rally. If buyer does not come, then high chance we get top near 6108. And if Fed do dovish cut before election but hawkish cut after election, then cut do total opposite what we see in textbook. Cut but market goes down like rate hike. So sometimes it feel like there is hidden rule that market is designed to do total opposite what we see in the book. The wave to make new lower low goes up, then fifth impulsive wave. So highest range of Fed interest rate right now 450. More time 10-year yield stay of this level or maybe fly more. you can say hawkish shift from Fed or market is bullying the Fed to admit there is an inflation risk and you did mistake of doing 50 basis point before election. But end of 2025 December FOMC meeting, yield will be trading near 3.6%. And before you ask that question, just read this news headline. This is a race for reserve currency. Who is safe haven, gold or treasury? You will get your answer.